Other things that we've heard is that, none of this matters insofar as the United States economy is very strong, and so we're immune to all this. We heard this in 1994, 1997, 1998. And no, we're not entirely immune. And yes, I'd be a little worried. It's not panic time. But when you look at the number of currencies that are effectively in free fall right now, when you look at some states that have failed, like Venezuela, and you look at these other problems that are building up, emerging market problems can lead to developed market problems if there is no adequate policy response. And unlike the late 90s, we also have geopolitical risk associated with these crises that we didn't have back then.
Joe Tanious, what do you think? You concerned here?
I am concerned. I mean, I agree with Ron's comments. Ultimately, it's just this tug of war that we've continued to see throughout the year. You do have some strong underlying economic data. The U.S. is certainly a bright spot, and some of the data that we received this morning was really just supportive of that. And of course, you have earnings season, which is a nice tailwind to the equity markets. But on the other hand, there are a lot of geopolitics. There are some concerns. There's this tit for tat game with China as far as trade that we continue to see bubble up to the top. And now you've got another fire starting, of course, with Turkey and fear that this is going to spread through contagion, whether it be exposure in European banks or other emerging markets more broadly. You add on top of that the strengthening U.S. dollar, and I think it's really just a recipe for heightened levels of volatility.
You wonder, I mean, we've talked about this the last few days here, what the Federal Reserve is thinking about all of this. I mean, to some degree, they're responsible for some of this as they unwind.
As they were in 1994, 1997, and other
periods.
But
this time is definitely different, given what we've been through the last decade.
And you guys have been hearing this all day long, that nothing happened in 1997 to the U.S., nothing happened to 1998. We had stock market mini crashes, right, that were only halted by the Fed in 1997 not pursuing a tighter monetary policy, in 1998 easing after Russia and long-term capital, that big hedge fund collapsed, and bailed out the banking system at the same time. Now, U.S. banks were much more highly levered to some of these global macro bets at the time. We might see other parts of the world where that's true. But again, the only thing that stopped these crises back then from becoming a U.S. issue was a Fed policy response.
Do we need to be talking about crises and contagion? I mean, with a market, right, that is close to record highs right now, with the Nasdaq up by about 12%, S&P up, 5% or so. I mean, isn't it just things like a stronger dollar, slowing growth in China that could change the risk reward of this market?
Yeah, absolutely. And crisis or no crisis, I mean, you could say these very same things in 1994, 1997, and 1998 when the economy was here quite strong. And the thing that does appear different in the U.S. is I don't think there are a lot of levered bets like a long-term capital, which in 98, when it blew up, almost took the entire banking system with it, and the Fed had to step in. Now, that's not to say that there aren't levered bets elsewhere in the world that could spark some sort of contagion.
So, Joe, you sound like you're defensive. What are you telling people to do?
Well, I think it's about having a balanced point of view and just keeping everything in perspective. We are defensive in the sense that we're neutral equities. But we do think that there are some opportunities. As I mentioned earlier, here in the U.S., it's clearly a bright spot. It is one way to be defensive, yet at the same time, try to gain exposure to the part of the world that is likely to continue to grow. So it's having an overweight to the United States. It's recognizing that a lot of these flare-ups that we continue to see, and I think Turkey is certainly an example of it. I don't want to be dismissive of the risk. The risk of contagion is real. But our base case scenario is that things sort of calm down and tensions between the U.S. And Turkey, certainly calm. I think it's about having the right exposure to risk assets and just sort of keeping a long-term focus in view and keeping everything in perspective.